Why most agencies fail, when they scale, and how to avoid it. If your plan this year is to make more money, we need to talk, because I've seen agencies go from $500,000 to $2 million in AGI and somehow end up with less cash, more stress, and thinner margins. More revenue does not automatically fix financial problems. In fact, sometimes it makes them worse. Hi, I'm Craig Cody. I'm a CPA. I'm a certified tax coach, and I work almost exclusively with marketing and PR agencies, helping them improve cash flow, increase profitability, and keep more of what they make. And one of the biggest mistakes I see agency owners make is trying to scale before they actually understand the financial side of their business. So today, I want to walk you through the financial foundation every agency needs before they scale. Because if you don't fix these issues first, growth becomes expensive chaos. Number one, know your numbers, and I mean really know them. A lot of agency owners think they know their numbers. When I ask them which service lines are actually profitable, they can't answer, and that's a problem. I had an agency owner come to me doing almost $2 million in AGI. On paper, everything looked successful, but cash flow was tight every month. When we dug into the numbers, we found they were making good money on strategy and consulting, but they were losing their shirt on execution work. They were bundling everything together and looking only at top-line revenue. And that's very dangerous because revenue alone doesn't tell you if the business is healthy. You need to know your profit margins by service line, profitability by client, what are your project level margins, what are your labor costs tied to delivery? Otherwise, you can wind up scaling the wrong thing. And if you scale an unprofitable service, it just creates a very big problem even faster. Number two, fix your pricing before you scale. And this is another huge one. A lot of agencies are still pricing based on hours. And I understand why. It feels safe, it feels measurable, but it does create a ceiling because the better your team gets, the faster they complete the work. So now you're actually being punished for becoming efficient. And that's not the way it's supposed to work. If a project used to take 40 hours and now takes you 25, but you're still billing hourly, you just reduced your own revenue and in turn, your profit. And that makes no sense. The agencies that scale profitably usually shift toward value-based pricing. They price based on the outcome, not the time. Clients are paying you for expertise, strategy, speed, and results, not your stopwatch. And if you're delivering strong results, your pricing should reflect that. Quick question. What's the biggest financial challenge in your agency right now? Cash flow, pricing, profit margins, late paying clients? Drop it in the comments, I'll read them all. Number three, this relates back to something I heard many, many years ago. Cash flow will make or break your agency. And this is probably the biggest stress point for most agency owners. And honestly, it keeps a lot of people up at night because agencies can be weird businesses from a cash flow standpoint. You're doing the work today, but sometimes not getting paid for 30, 60, or 90 days, God forbid. Meanwhile, payroll's due, no options there. Contractors need to be paid. Your software, those subscriptions, they hit monthly. Taxes are due at least quarterly. And if you grow too fast without enough cash reserves, the gap is going to get dangerous. I've seen agencies double revenue and somehow end up with worse cash flow because too much money was tied up in receivables. So before you scale, tighten your collections. When possible, you want to shorten your payment terms. You should always consider upfront deposits and build a cash reserve. Personally, I like agencies to have at least 3 months of operating expenses available as a cash reserve. 6 months is even better. Maybe 3 months inside the business and 3 months outside the business, because growth costs you money and cash flow problems destroy otherwise good businesses. Number four, clean up your books. This one sounds probably the most boring. It's the thing that excites me sometimes, but it matters more than people realize. If your bookkeeping is a mess, your decisions are going to be bad. I've seen agencies misclassify expenses, mix personal and business spending in there, ignore their bank and credit card reconciliations, and wind up with completely inaccurate P&Ls. And then they wonder why nothing makes sense. Good financial reporting matters. You should be reviewing your profit and loss, your balance sheet, your accounts receivable, your cash flow reports, profitability by project, and this should all be done on a regular basis. Definitely not once a year at tax time. No, that's a no-go, because by then it's really too late to fix pretty much all your problems. Number 5, your tax structure matters more than you think. A lot of agencies owners stay set up the same way for years because it's familiar. And maybe nobody is telling them that they need to look at their structure. But the structure that works at 100,000 usually doesn't work at $1 million. And your entity structure impacts your self-employment taxes, your payroll requirements, retirement planning, profit distributions, your long-term tax strategy. And many agency owners are overpaying taxes simply because nobody ever reviewed their structure properly. For many agencies, an S corporation election can create meaningful tax savings, but not all, and it has to be done correctly, and it needs to be done with thought. And the larger the business gets, the more expensive it becomes to fix mistakes later. Number 6, stop chasing revenue, start managing your profitability. This is the big mindset shift. Revenue, like I said earlier, is a vanity metric. Profitability is what actually matters. I've seen agencies doing $3 million annually agency gross income, and they're barely making money. And I've seen smaller agencies doing under $1 million with incredible margins and great cash flow. The difference really is intentional management. The profitable agencies know when to hire, know which clients fit, understand utilization, and they watch their margins closely. They make decisions based on data. They're not just chasing top-line growth. They're building a healthy business. So before you scale your agency, ask yourself, do I know my numbers? Is my pricing model working? Is cash flow stable? Are my books clean? Have I optimized my tax structure? And do I actually know my margins? Am I managing my profit intentionally? Because scaling without financial clarity is risky. And the agencies that scale successfully almost always have one thing in common. They built the financial foundation first. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got 2 things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.